Rock and roll hoochie coo.
All right, all right, all right, all right. All right. It is Thursday, last day of the month, April 30th. This is Wall Street Beats. I am Benjamin Bry, joined by Kevin Bakes Baker and the man who's been the most popular guy lately, Bob Morris,
Throw
our
the
energy
ball.
guy. Let's start with Bob. And we had oil looking like it wanted to break out yesterday, and then we got a little reversal. What do you think here?
Yeah, the reverse. I mean, $1.20. I mean, we're still at almost $106 per barrel. It looks like a little bit of profit taking ahead of the June contract expiry. So I wouldn't make a big deal out of dollar pullback after we've run up to 105, $106 a barrel here. At the same time, there's little news on the UAE backing out of OPEC, which some speculate longer term could add to supply if they're not part of OPEC and part of the production cuts and the constraint out of OPEC. But that's sort of a longer term view. But it was sort of positive from, a price perspective that the UAE is backing out of OPEC. But we've still got this tension, still no deal, still no regime change, still a regime that is going to fight and claw before giving up their nuclear ambition of enriching uranium and having a nuclear weapon. And so we've said all along, not to be a broken record, but unless you have regime change, this is a religious war, fanatical objective for this regime. And it's going to be very difficult to reach a deal with the current regime, with their ambition, with their nuclear ambition. It's just going to be extremely difficult. So I think that the administration is doing the right thing and trying to put the economic chokehold on Iran. And I think that is beginning to work. We'll see how that continues to play out. But I think that's the correct strategy for now, and see sort of what chaos that drives internally and whether that does ultimately drive some regime change, although it seems not the likely outcome right now, but we'll see how that plays out. But that's going to be the strategy for now, which is going to keep things constrained out of the Strait of Hormuz, and why oil's run up another $10 a barrel here in the past several days, just on the fact that I think the market's beginning to realize the longer this goes on, the tighter this makes the whole supply situation. And at this point, Iran's running out of places to store their oil or to put it, which
Thank
means
you.
they begin to shut in wells. And you shut in wells there for a significant amount of time, and it begins to damage them and makes them harder to bring back on at the same rate they were producing at before. So again, this is not a good situation, and we've said all along, it's you sort of open the can of worms here that's going to be hard to contain. Granted, the Trump administration wants very badly to see energy prices come down ahead of the midterms, which is 5 months away. But I don't think that anywhere close to the deal. And if this economic stranglehold doesn't work, it may come back to the military option of stepping back up military action or attacks. And so that's not obviously positive for or good for bringing down oil prices. So this situation is going to be murky here, and we continue to hold on to the names we've said all along. We were holding on to all of our oil names. We were writing covered calls. We were just waiting to see how this plays out. And you've seen names like C&Q and others continue to move up. And, that sort of leads into earnings here. We haven't gotten the earnings from the oil names yet. We've gotten a few of the gas names. And what's interesting is our top two gas names, EQT last week and Expand Energy this week, have pretty handily beat on the top line number on the revenue because of better realizations on their natural gas price and not shutting in any production due to the storms this winter. And so the point there is that the market underestimates the capture of these higher commodity prices. And as we start then to see the oil names, at Conoco today, we'll get Chevron, Exxon tomorrow. I think you'll see on the oil side that the market probably doesn't fully incorporate the higher oil price we saw for the last month of Q1, although companies tend to sell on a beginning of month basis. But as we move forward, I think the market is still underestimating the realization these companies are getting at this higher oil price and how much of that's flowing to the bottom line that's not yet in analysts' full year estimates. And so, we will continue to hold on to these names. And in particular, we talked about EQT and Expand Energy, given where natural gas prices we think are near a low probably for the year, that we would continue to hold those names, and any pullback accumulate, although they've not had a pullback. So we're holding on to those gas names. And, honestly, with the volatility and uncertainty on oil prices, the gas names have become a little bit more intriguing here, given where they pulled back to, and they've not had the run up that the oil names have had because natural gas prices have been pung. But we're seeing, like I said, very good results here on EQT and Expand Energy so far, and our two favorite names. We continue to hold those, and if there were to be any sharp pullback, would add to those names on the gas side. But long term, the fundamentals for natural gas remain in place, and that's what we talked about Monday is going to drive the long term fundamentals for natural gas. Even though we're well below $3 today, the long term fundamentals between LNG exports, AI data center demand, and just onshoring industrial production will be positive for the natural gas price fundamentals.
Yeah, it's funny you said that about about the closing the wells and having to store stuff. It made me think of COVID, and I was really long tankers into COVID, and I just was checking while you were talking. The tankers are trading pretty well, actually. I was looking at
Mm-hmm.
Scorpio and TK and Frontline, all those guys. And I guess the difference being the reason we got out of those things was a buddy of mine who was an oil guy back then. He's like, look, I just don't see the whole industry of energy getting its ass kicked and tankers being the place that they're making all the money. And that ended up being how it was before it finally played out. But do you do you think that we're in a situation where we talked, I don't know when the last time I was on the show with you, but we talked about this cliff that was out there.
Mm-hmm.
And, Trump clearly said blockades continuing. I'm of the camp that the US wants the blockade, that they're just, I don't think Iran is actually in control. I think they're just like saying that Iran's in control because that's
Yeah.
convenient for them, but they actually want to stick it to a bunch of guys.
Yep.
And like basically, where are we relative to that cliff? Like, because we're going to talk about eggs in a second with bakes, and that's one of the trades that, and I'm not an eggs guy, but we had a eggs expert who used to run Bunge's and Smithfield's trading desk, and that seemed like one of the natural plays from the fertilizer and all that stuff. Bob, how close are we to that cliff? And I know it's
I
different for
mean,
different countries, so
I
it's
mean, I mean, I
not
think
one
we're
universal.
30, 60 days away from that cliff, and I'm looking out here at the December, January contract. We're still 78, 79, still below $80. That's continued to creep up a little bit. Obviously, not as much as the front month. So we're still in this very sharp backwardation on the curve. But you're probably 30, 60 days, just given how long it takes for these cargoes that did get through the Strait of Hormuz, that were on the water, getting to their destination ports. Once that happens, and then there's nothing behind that, you're 30, 60 days away from that cliff.
Okay. All right. Kevin, what do we got today? Let's talk.
I've got, and this came out of my work this past month going through 5,000 plus charts. But we talked about this a little bit before, but now I think it's coming to fruition. This is the Invesco DB Agricultural Fund. I think that's probably Deutsche Bank, right? DBA, and this is a fund that owns the futures of frankly almost all the agricultural products, but corn, cattle, and soybeans, like the softs you talked about, is the top probably 30% of the portfolio. But just look over here. I hope you can see it. The in the bottom right, the blue lines are swamping the pink lines. So this is clearly under accumulation. You get the 50-day coming above through the 200. You get a relative new high that is just taking place, and everything kind of makes sense given uh, the fertilizer situation that the Strait of Hormuz exacerbates. Costs for farmers everywhere are going up, and they're going to pass it along. And there's only so much substitution you can do. And so I have not bought this yet, full disclosure. I'm still doing some work, but and I mentioned before I was getting positive on ags, and now I'm getting more positive on ags, and I'll let you know when I pull the trigger and add this to my top 10 ETFs. I own 9 now, and I've got space for one. So I'm looking at this hard, but this makes intuitive sense to me, so I'm paying attention.
Hey, Banks, you mentioned the fertilizer situation. Is it also this, excuse me, supposed drought or water shortage we've had, the dry winter we've had in the Midwest, a part of the factor here too?
Yeah, I mean, when it rains, I was going to say when it rains, it pours. That's another way to go. The farmers are in a world of hurt,
Yeah, they are.
and yes, so between you've got a lot of things come together, and when they do, this is a relatively illiquid market, and it's you're going to see a lot of upside pressure, I believe. So yes, that's part of the problem.
Yeah.
The other thing is the weather is always the catalyst for agriculture. So I think that what we talked about with the cliff and all these things in place, but my power buddy trades power, and power traders watch the weather like hawks, as
Yeah.
do agricultural traders, right? And they're all saying to me that could be the greatest El Nino since 1877 this year. So,
Wow.
again, I'm not the weatherman. Don't blame me, or whatever. But that is what I'm hearing, is that there could be a monster El Nino, which combines with what we're talking about with the supply chain, with the fertilizer, the energy, and just could be one of those epic runs. And I actually bought my first agricultural future in 20 years. I bought the September corn uh,
Huh.
on the
Uh,
recommendation of my buddy Nico Hoyt, was on our podcast. And you know, I'm hearing a lot of smart guys talking about this, and I have a pretty good macro nose, and now I'm not in the weeds as much where I could give you the fundamentals at an articulate level. But Kevin's telling you from the charts, fundamental guys are saying it. Some of my guys who have good noses, so I don't know. This egg trade could be good, and when they run, they really run, don't they, Kevin?
yeah, a good segue because I just put up the monthly chart because I know you like to see all the time frames, as do I. But look at this over here. Look at this up volume spike over the last couple of months. Stock right? I mean, I'm not the
Yeah, that's a good
sometimes
looking chart. I buy that chart without even knowing what the ticker was.
and so here we are at let's call it 28, and back here in 07, 08, when everybody was talking about Potash, Saskatchewan, etc. This is 41, so 42 maybe, and so I mean that's the history, and it looks to me like you don't have a lot of resistance between now and 41, 42. So I'm intrigued and stay tuned.
Okay. Any other ones that you got for us?
Just by update on my REMX, this is the Van Eck rare earth and strategic metals, lithium being the big one. Albemarle, the number one name, is screaming. That looks like a base and a triangle and a pennant, and with volume picking up. So yes, it's. I bought this to January 6th. I can't draw lines because I hate my chart service. I'll talk to them, but I'm up 32% this year in this name. Uh, and I'm it looked coiled to hit new highs to me. This also has a pretty good long term chart. Rare earths has been was in the headlines a lot more before the Iran war started to happen, but lithium is in short supply, and the commodity itself is looking very, very bullish. So I'm holding this. This is about 10%, maybe 11, 12% of my portfolio. This is REMX, the Van Eck Rare Earth and Strategic Metals ETF. Lithium being the biggest one, but it owns all the other names I can't pronounce on the periodic table as well. So it's, again, pretty small, not a lot of liquidity in this market. So when the buyers show up, it tends to shoot pretty dramatically, and I think we're in for another leg higher.
Yeah, no, I mean, what do you think? What do you make of the metals? The other industrial metals have been pretty weak lately. Gold, silver down
Well,
4 or 5% for the month. Copper hasn't really been able to keep a bid. I was there's a couple other ones I think that I was looking at in that space has been weak lately. I think, right?
Yeah, no, and I'm very cognizant of that because I look at my ETFs and I rank them by relative strength, and they've all slipped, pretty dramatically over the month. I should have just given my money to our colleague Robert Marston and gone away, uh, but I didn't. So here we are. But this is my copper name, COPJ, the junior miners, and it's the spot is around 590. The high is 620 for spot copper, and I'd love to see it take that out. Frankly, I thought it was going to do that recently, so that attempt has failed. But we and I hate going. Oh, the demand for AI data centers means you need more copper. The electrification of everything, but it's not happening yet. So I'm more than willing to get rid of the good for the great. I still think the copper story long term is very bullish, but I have to pay attention and respect this relative strength weakness right now.
Okay, good. All right. Well, it's an interesting time. I think it's a little bit of mixed signals all of a sudden where oil's elevated, stocks are at the highs. Stocks are at the highs though because of the AI trade. I mean, like, that's very clear. Like, I downloaded the S&P 500 and I was looking at the relative contribution on the year, and I mean, it's the top stocks are just almost all capex beneficiaries, memory stocks, AI related chips, semis,
Yeah.
and then you look at the percentage of market cap, and then on Sunday, Rupert was talking to me, and the EM. So you buy, emerging market, that's almost 40% semis and memory now. The Kospi, which is just an absolute runaway train, is two stocks, the most concentrated index in the world. So it's actually quite incredible how much of the stock market is really all in on this trade right now. And, I think the agriculture thing is not, there's some chatter. So amongst the generalist community, I think there's some, but that's coming off a low base of none, right?
No, I'm
So
with you.
yeah, and so I just think that those are kind of more interesting things to be thinking about here than like, oh, they're gonna, I wish I'd have brought this chart, but I did the top five hyperscalers. So the big dog, the four big dogs, and then Oracle. Their capex plans for 2026 are 2.1% of GDP, up 80 basis points to GDP. 80 basis points of GDP incremental is from those five guys' capex. And so I guess, that's really what's keeping things. And I scaled it against all the greatest projects like electrification and, the great works in the 30s and the .com. If you add them all up, it's equal to all of them. The only thing that's on a bigger scale is the railroads in the 19th century. So we're in rare air, boys.
Yeah, the railroads is the analog we don't want to see because they it was a speculative furor on Wall Street, and then I mean just about all of them got crushed. There were 100 railroads at one point in time. They just got obliterated.
And semis will get obliterated at some point here on the other side of this as well.
Yeah, I'm going to stop saying that because they looked extended to me a long time ago, and they keep getting more extended. So while I don't want to buy them and I don't want to own them, really, I don't want to short them because
No,
you
I
know
understand. I understand, and I'm not saying short them here. I'm saying that on the timing's always the hardest thing in markets. Time in general is a hard concept for people to understand because it's not linear, right? We like to think of each day as one day, but the truth is change. It's a measure of change and change clusters. And when things crack, then they really crack. And one little final comment I'll put is I've been doing a lot of research on how market structure is working and like the role of LLMs in how we actually, because a lot of people were confused about how we went from just an 8% correction in the S&P to just something that looked like coming off the COVID low, coming off the '09 or '08, '09 low, or liberation low. It looked, what the rally we got over the last month was one of these moves after like a very sharp drawdown. And what I think's going on a little bit is that the role of LLMs, the role of algorithms, the market's losing some of its memory, and then people are all in on a trade. So once you get it going, everybody's self-aware, they let it persist. So that's a testament to what Kevin does, that trend will persist. But then everybody gets out at the exact same time too. And that brings us back to our other colleague, Jeff Mackey, who talks about the Christmas tree of death. We see that chart pattern more than ever now, where it rip, vertical like silver, and then boom, the other side. And, you know, the deleveraging side, you just can't get it back up. And it's funny because the greatest, fastest one we've ever seen was Avis Rental Car recently, where the stock goes from $90 to $850. And then 3 days later, it's at $150. That was incredible. You know, so I think that it's an interesting dynamic that's not being discussed enough. And so I'm starting to do some, you know, reading a lot of academic papers and starting to look at some stuff. But it's a testament to like Kevin's process of ride the trend, and then when it breaks the trend, don't dick around, get out of there. Because I'm seeing it more and more. You know what I mean? Like with it's something you own, like EOG for Bob. Like that's just a good company that's under levered, and they're gonna be whatever. There's no hot money in EOG, right? But like outside of some of those kind of things, you know, I think that there is something to be paying attention to, and you know, listening to guys like Kevin who are just kind of scouring the trends and just trend following in general, I think is more interesting than I've ever thought it was, to be honest. All right, guys, you got anything else? Or are we gonna call it?
I just want. He's not on the show, but I just got to give flowers. You know, this is Robert Marston's SIMO, Silicon Motion Technology, and
I own that.
Huh?
I own that, but only because of Robert.
Well, and I mean that's my point. The smoke.
Yeah, he pitched it like 2 years ago.
This is a growth guy's dream and a growth guy's, you know, and a momentum chart dream. And so the growth value guy from Pennsylvania is buying it back here in the low to mid 50s, and it looks okay. We've had a big run, and I'm not going to sell any because the numbers keep going up. And the stock at one point was up 50% yesterday. It's up now, you know, 50% off of this base. Sorry, a third off this base, 150 to 200 in a day. And so, you know, pay attention to Marston. The guy's got a hot hand. He's blown away my views of what small cap value is and can do. And, you know, just a tip of the hat. It's unbelievable.
Yeah, he digs up a lot of under the radar screen small caps that have done well.
Yeah, I mean, look, he's a good stock picker, and he likes to look at stuff that, you know, people don't just. Again, it comes back to like that's I guess what my takeaway, and I think I'll end the show is there's I'm the kind of guy who shorts the very top and buys it when it's absolutely hated. Like I buy energy in 2020, I bought tech in 22. Like I buy stuff, or I short silver in January this year. Like I'm like kind of a turn guy. You know, Kevin's kind of the middle innings guy. Like everyone's got their own way of doing it, basically. And you know, Robert is definitely like me, but he's not a big shorter. But like he buys that stuff when it's beat up and no one's paying attention to it. And if you think about positioning as a capacity, so like, you know, kind of a physics thing, like a tank. You know, we were talking about tanks being full. You know, you get to the point where you can't put any more oil in the tank. Well, positioning becomes too crowded, and that's how you have these releases of 850 to 150. Silver goes from 125 to 75 in a day. You know what I mean? But you want to be there when there's not much oil in the tank, and then you start getting guys to lift your bags for you, you know, like, and so Robert's been pretty good at that. He's had some good ones over the years with Wall Street Beats. So if you guys like to invest in small caps, definitely check out Robert's stuff. He's always pitching his stuff, and he's also there when he doesn't have anything to do. So he's not necessarily pitching you anything that he's not doing. So, all right, I think we're going to call it, boys. I think that's a good show. It's right at the half-hour mark, so we're very efficient. I am Ben Bry. This is Bob Morris. Kevin Bakes Baker. This is Wall Street Beats. Telling you to look at some eggs. That's a big takeaway today.
Amen. Have a great weekend, folks. Jen, thanks as always.
Take care, guys.